May 10th, 1866, London, the heart of global finance. A single note pinned to the door of a bank at 65 Lombard Street sends shockwaves through the city. Overend Gurney and Company, the mighty bankers' bank, has collapsed, owing 11 million worth over £1 billion today. The fallout, a financial panic that brought Britain to its knees. But how did the world's greatest discount house fall so spectacularly? And what dark secrets hid behind its polished reputation? Stick around, because this story of greed, betrayal, and economic chaos will leave you speechless. Let's rewind to 1800. London is a global powerhouse, and a new player steps onto the stage. Richardson, Overend and Company, later known as Overend Gurney Co, founded by Thomas Richardson, a sharp-witted clerk, and John Overend, with capital from the Quaker-run Gurney's Bank in Norwich. This wasn't your average bank. It was the banker's bank, specializing in bill discounting, buying and selling IOUs at a profit. Sounds niche, right? But this was revolutionary. They took a risky bet, focused solely on bills of exchange, the lifeblood of Victorian trade. Merchants, shippers and bankers trusted them to turn promises of payment into cold, hard cash. By 1807, Samuel Gurney, a Quaker known for his ironclad integrity, took the helm. Under him, Overend Gurney became a juggernaut. By the 1820s, their turnover was double their competitors combined. They lent to other banks during the 1825 financial crisis, earning the title of the world's greatest discounting house. For 40 years, they were untouchable. But pride comes before the fall. Fast forward to the 1850s. Samuel Gurney dies in 1856, and the bank's golden era starts to tarnish. New management, hungry for profit, ditches the cautious Quaker playbook. Instead of sticking to short-term, safe bill discounting, they dive headfirst into risky, long-term investments, especially railways. The 1850s railway boom was like the dot-com bubble of its day. Everyone wanted in, but the bubble was about to burst. By 1860, Overend Gurney's books were a mess. They had $4 million in liabilities, but only $1 million in liquid assets. That's like having $1 million mortgage, but only $250,000 in your bank account. Desperate to stay afloat, they made a fateful decision in 1865 to go public. They incorporated as a limited company, selling €15 shares at a €9 premium, cashing in on the booming market of 1864 to 1866. Investors poured in, dazzled by the bank's reputation, but the cracks were already forming. Then disaster struck. Stock and bond prices tanked, railway stocks cratered and credit dried up. Overend Gurney was drowning in bad investments. They begged the Bank of England for a bailout. The answer, a cold, hard no. On May 10, 1866, they posted that infamous note, payments suspended. The next day, panic erupted. Crowds swarmed their offices at 65 Lombard Street, desperate to withdraw their money. London, Liverpool, Manchester, Norwich, Derby, Bristol, fear spread like wildfire. May 11th, 1866, Black Friday. The collapse of Overend Gurney triggered the panic of 1866, one of Britain's worst financial crises. Over 200 companies, including dozens of banks, went under. The Bank of England's lending rate shot to 10% for 3 months, an economic gut punch. Unemployment spiked to 8%, wages plummeted, and the working class suffered. Sound familiar? It's like 2008, but with top hats and telegraphs. But here's where it gets wild. The Bank of England, a private institution back then, faced a choice. Let the system collapse or step in as the lender of last resort. They chose the latter, pumping $4 million into the market in just 2 days. On May 11th, they got a letter from Chancellor William Gladstone, allowing them to suspend the Bank Charter Act of 1844, which limited how much money they could print. This was huge. It saved the financial system from total collapse and cemented the pound as a global currency. Walter Bagehot, editor of The Economist, called this the birth of modern central banking. But he also warned the bank's refusal to bail out Overend Gurney showed it wouldn't save every failing institution. Why? Because Overend's books were rotten. The bank knew they were insolvent, not just illiquid. This wasn't a rescue mission, it was a lesson in accountability. Now the juicy part, the scandal. Overend Gurney's directors were hauled to the Old Bailey, accused of fraud. Their 1865 share offering, a sham. The prospectus was a measly 300 words, with no balance sheet or real financials. Investors were duped, and shareholders lost everything, $2.5 million, with some forced to pay an extra $25 per share to cover debts. Many went bankrupt. But here's the twist. The directors walked free. Lord Chief Justice Sir Alexander Cockburn ruled they made grave errors, not criminal acts. The real villain? An unnamed advisor found guilty but shrouded in mystery. Who was he? Some say a rogue partner, others a scapegoat. The truth, lost to history, but the damage was done. Overend Gurney's collapse fueled public outrage, sparking demands for political reform and feeding into the 1867 Reform Act, which gave voting rights to over 1 million people. Overend Gurney's collapse wasn't just a Victorian drama, it reshaped finance forever. The Bank of England's role as lender of last resort became a blueprint for central banks worldwide. Walter Bagehot's rules, lend freely but only to solvent firms at high rates, still guide crises today. But the real lesson, greed and reckless risk can topple even the mightiest institutions. Think about it. Lehman Brothers in 2008, Northern Rock in 2007, same story, different century. Overend Gurney borrowed short, lent long, and ignored the warning signs. Sound like subprime mortgages? Exactly. And the panic's global ripple effects. Countries exposed to London's banks saw exports drop for decades. This wasn't just a British crisis, it was a warning to the world. Overend Gurney Co was more than a bank. It was a symbol of trust, ambition, and catastrophic failure. Its collapse in 1866 showed the world that no institution is too big to fail. If you find this interesting, do drop your thoughts in the comments, hit that like button, and subscribe for more tech scandals and business failures I constantly drop here. Also check out our channel for more videos like this.